Hey there, everyone. It's Matt Donahue with your weekly market update for the week ending Friday the 13th. An exciting weekend, right? We have Friday the 13th, and we have Valentine's Day, and then we have President's Day. So I hope everybody had a great time. For those of you who are off on President's Day, I hope you have a great long weekend. Let's jump into it. I have a simple quote from Epictetus, one of the Stoic philosophers. He said, is impossible to unite happiness with a yearning for what we don't have. He wasn't talking about markets, but he might as well have, because investors do this all the time. I'll feel better when the market goes up. I'll relax when rates fall. I'll be comfortable when inflation disappears. Or here's a big one I've heard over the last few years. Things feel frothy right now, whatever that means. And if your peace of mind depends on future conditions, you're never going to have peace of mind. Let's go through the market data. Inflation came in at 2.4% year over year. Core inflation was at 2.5. Retail sales were flat. The S&P was down. It's not a crisis, right? It's not all great news. It's not all bad news. It's not effortless growth. We're in a maturing cycle. In maturing cycles, discipline matters more than momentum. One of the clearest signals right now is gold. January saw almost $20 billion flow into gold exchange traded funds. That's a record. The total gold ETF assets now sit around $670 billion. That tells us that investors are cautious. They're moving into gold because they're concerned about fiscal policy, geopolitics, and inflation. But remember, gold does not produce income. With the 10-year Treasury near 4%, the 30-year near 0.7%, bond yields matter again. If we think about rates, debt, and cash flow, mortgage rates, they're still above 6%. And that big mortgage at 3% suddenly feels a lot heavier when it's 6%. Rates are no longer background noise. They affect real household decisions. And that's why the money section of the 2026 financial fitness checkup, which really does matter. Are you concerned about your portfolio? If so, set up a time to talk with us and do a review if we haven't already reached out to you. Do you need a spending plan? Are you worried about inflation? Are you looking to reduce taxes? These are all structural questions that only you can answer. They're not emotional ones. When your portfolio drifted into growth stocks a little too heavy, those pullbacks feel pretty sharp. If you ignored fixed income during that zero rate era, you might not have enough in fixed income to be able to take advantage of the higher interest rate environment. Diversification does matter again. Rebalancing matters again. It always mattered. It's just a lot of us got seduced by year over year growth rates. Inflation at 2.5% doesn't sound as dramatic as it did a few years ago, but it compounds. And over time, it erodes your purchasing power. A written spending plan can help restore some clarity. A disciplined savings plan can help restore some margin. And a lot of times the stress doesn't come from the market, it comes from an unclear structure. Volatility will create some tax loss harvesting opportunities. Higher yields create income planning opportunities. Strategic Roth conversions will reduce lifetime taxes. The planning of those things gives you flexibility. Waiting creates pressure. We talk about this all the time. If I wait to have a decision forced upon me, a lot of times I don't have the options I'd like. If I had spent some time thinking about how I want to respond when I have to make that decision, I've been able to think through and maybe plan some things. Don't forget Medicare. Open enrollment runs through March 31st, and missing that window will cause some penalties. These deadlines matter. They're not just paperwork, they're strategy. So just final perspective for you. The environment does not require any kind of panic at this point, but it also doesn't justify any kind of complacency. Inflation has cooled. Markets have moderated. Bonds offer income again. This is a transition period. It's not a breakdown. Think about what Epictetus said at the beginning. Longing for the things we don't have. In financial life, that's like chasing returns or waiting for the perfect moment to invest. Disciplined and successful investors, they do something different. They review, they rebalance, they think about taxes, they're aware of deadlines, they make updates when they need to. They're building peace of mind for themselves. They're not wishing for it. Let us know if you'd like to talk, 888-339-0093. But otherwise, enjoy what is for you, hopefully a short week, and we will see you next week.